Greetings again, amazing traders, and welcome back. Today we are going to be doing a market review on pound dollar. At the time of recording, it is February the 12th, 2025. So we are going to be looking at the market review for the 11th and the 10th of February, which is actually Tuesday and Monday for this current trading week. So in our last lesson, I introduced to you an indicator called the ICT everything, which is actually going to help us mark the Asian range so that we can look for the ICT power of 3. And we did say that the indicator is going to mark a range that starts from 8 p.m. New York time to midnight New York time, okay? And what is the condition? The condition is if you are bearish, you want to see price trade above the Asian range or the Asian session, take all the buy side liquidity, and then we are going to look for sell opportunities to target the Asian lows, and we are only going to target one standard deviation, okay? One standard deviation, which is a replica of the Asian range. I hope you get it. So we are simply taking the Asian range and we are replicating it downward to get one standard deviation, which is going to be our lowest hanging fruit. So if you bear with me, you will realize that the market did actually open here, which is the midnight opening price. You may want to watch the old video so that you can follow along. I am going to make it 2 pixels because there's something I'm going to show you here which is very, very important. Now you will bear with me that the market actually traded one standard deviation. How far did the market even go above the Asian range? Look at this, one standard deviation, which is right here. If you watch the old video, you realize that I showed you how to put the standard deviations here, these settings. You see the indicator helps you to mark everything already. So this is one standard deviation right over here. You see how the market hits that one standard deviation beautifully here, okay? Beautifully right here. As soon as it hits it, we see a reversal. And what is that price level? The price level is 1.2414 right over here. It hits one standard deviation beautifully and then displaces aggressively. And what did we see? We say whenever you see a displacement like this, you are going to mark this range low and this range high, and you want to see the market retrace above 50% of this range here so that you can look for what sell opportunities. But sometimes the market is not going to retrace up to or above 50%, which is into premium. The market can simply just use 50%, which is the equilibrium, and then it's going to sell off. If you watch the video I did on optimal trade entry levels, you are going to understand exactly what I just said here. But look at something here. I also told you that if you are bearish, you can sell above the midnight opening price, or you can sell at the midnight opening price. You will bear with me that the moment price traded below this midnight opening price and then came back, you see price did not go above it again. So the midnight opening price is very, very powerful, okay? You can always use it to gauge price. You see, if you even study, look at how many times price reacted here at the midnight opening price. It stayed there, okay? Several times it stayed there and then bought off, and then when it came and broke below it, it acted as what? A resistance. Let me use resistance so that you can understand exactly. But see, the moment it stayed here, it never went above that again. So if you were not able to sell above the midnight opening price, you could still sell at or below the midnight opening price. And what is going to be your target objective? Your target objective is just going to be one standard deviation below the Asian range, and that was a cool 37 pips, which would have been a very good price move, okay? So you can use this strategy, and trust me, you are going to make a lot of money if you can just follow what I'm going to show you, or what I've been showing you using this strategy. Now there is something I am going to show you again. If you bear with me again, look at something. The market went 2 standard deviation below the Asian range, but that occurred on Tuesday rather. It occurred on Tuesday. This is Tuesday trading here. The moment it hit the second standard deviation below Asia, which is at 1.2 or 3369, you saw a massive reversal from here, and the market took off immediately. So there is something I'm going to show you. Listen. If you cannot use this indicator, even though it has already marked everything for you, you can still use your Fibonacci tool, okay? You can use your Fibonacci tool. So this is the Asian range here. If you want to know one standard deviation below or above the Asian range, you can anchor your Fibonacci tool like so. You can anchor your Fibonacci tool like so. There's a video I did on how you can set your Fibonacci tool. Okay, I hope that you may go back again and you watch that video. So this is one standard deviation below this one full range. So if I remove negative 0.5, we are going to have one standard deviation below. Let me take away negative 0.5. Let me take away negative 1.5. I am going to do just 2 and 3 so that the numbers can be even. 4, I'll do 5, 6. Yeah, let me keep it that way. Yes, okay. Now if you bear with me, this is a full Asian range here. This one here, we just replicated it down here. Okay, that's one standard deviation, and then we replicated it again down here. That makes 2 standard deviations, and you see how the market hits that level here beautifully the next day and takes off. But what is our goal? Our goal is just one standard deviation. Okay, our goal is one standard deviation, and then we are good to go. I hope you understand what I just did here, and if you have been following along, please make sure you do exactly what I've done here. Now, what did we say again? We said we want to see a form of accumulation, manipulation, where the manipulation occurred here above Asia, and then we want to see distribution, and we have the distribution occurred here. So we could have waited for this manipulation to occur, and then you wait for the distribution phase where you are going to sell here. Okay, accumulation during Asia, manipulation over here, and then we have a distribution down here. Okay, all right, let's look at Tuesday trading and see what happens exactly. Now, just to mention something, there's a problem with this indicator. The problem is that if the Asian range does not match up to 30 pips, the indicator is not going to mark it. Okay, that's something you should note. The indicator will not mark it, so you may have to do that manually. The indicator may rather mark the central Bank-Steelers range or the flout, which is something that I'm going to teach. Okay, please just be patient, the video is going to come up. Now we are going to do it manually. So this is the Asian range that starts from 8 p.m. right to midnight, from here to here. Okay, from 8 p.m. here to midnight New York time. Okay, so remember to do that, don't forget. So we are going to mark the high from 8 p.m. here and the low to midnight. That is going to give us the Asian range. Okay, that's going to give us the Asian range. I hope you follow along. It is basically the same thing that we just did over here. Okay, it's basically the same thing. This is also the Asian range over here. It's the same thing. So what's the next thing? The next thing is we are going to look for the midnight opening price. But now you bear with me that the indicator has already marked it here. This line you see here is already marked. Okay, but I'm still going to do it manually so that you understand what I am about to explain further. So look at something. What happens here? Accumulation, manipulation. You see, this is the manipulation here, right? This is the manipulation that occurred here, right? The moment price took liquidity below the Asian session, which is sell side liquidity, what happened? We saw a market structure shift over here aggressively. This is a market structure shift, right? Market structure shift or a change of character. It depends. You can use market structure shift, you can use change of character. It's all the same thing. And then we saw price trade back into what? Into a fair value gap here. Right, if you look at it very well, you are going to see a fair value gap over here. This is a fair value gap. This one here, that's a fair value gap. You see, the moment it hits that fair value gap, what happened? It took off aggressively. And how far did it go? We are going to do that right away. So for the standard deviations, we are going to use our Fibonacci tool. So this is Asian range over here. We are going to extend our Fibonacci tool down. Remember that indicator is going to help you do that. Okay, this is the Fibonacci tool. This is the Asian range here. But it did not go right down to one standard deviation lower, right? It didn't go. It went about it went more than half standard deviation below, which is totally okay. Most of the setups are going to form here at one standard deviation lower. If you are bullish, most of the setups will form here. Okay, look for buy opportunities here. If it goes 2 standard deviation lower, it's okay. If it goes 3 standard deviation, it's okay. But if it goes below 3 standard deviation, just cancel your bias, just sit and wait, don't do anything again. Okay, so how far did it go higher? That is going to be our focus now. So we are going to use our Fibonacci tool again, and we are going to extend to see how far it went higher. This is this is an Asian range. We are going to extend it right over here to see how many standard deviations the market actually went on Tuesday. Okay, let us see this one Asian range over here. 1 standard deviation, 2, 3, 4. Just give me time. And I think 4.5. Yeah, 4.5 I think. Okay, just give me time, let me check 4.5. Please, you may watch the video how I do these settings. Okay, I did a video on that already. Let's check 4.5. This is 4.5 standard deviation. You are going to see accuracy here. So this is 4.5, which is at 1.24534. beautiful. You see that? See how the market hit 4.5 standard deviation beautifully over here, beautifully, which is 1.24531. actually it hit that beautifully over here, and then we saw price begin to react at that level. So this strategy is very powerful. Okay, it can help you to know how far the market moves. And I mean, if you even look to the left of your screen, you are going to notice that we have a fair value gap here, and that is the reason why price is reacting at this level. This is a fair value gap right to the left of your screen, which is a 15-minute fair value gap, since you are working on a 15-minute time frame. So you see, these things are not random. Okay, if someone tells you that the market is controlled by buy and sell pressure, please don't believe that, because the market is coded. Okay, it's controlled by an artificial intelligence. That's why you have a lot of accuracy in the market. Okay, so I hope you understand what I just did here. But what is our profit objective? Our profit objective is just what? 1 standard deviation. So if we bought here, we'll just be looking for 1 standard deviation. Okay, and that was 29 pips. So if you took this trade, you will have made 29 pips as profit, and that will be okay for the day. I hope you understand this. Okay, so I know it may confuse some of you who have not been following along, but trust me, if you have been following along, you will understand what I just did here very well. So what is the message? The message behind is always pay attention to the midnight opening price, because it can act as a support. Okay, it can also act as a resistance. Always pay attention to how price is going to react at the midnight opening price. Always pay attention to that. Always. I can't insist on this enough. So this is the midnight opening price here, and this is the midnight opening price for Tuesday trading, and you see how the market treated that beautifully. Okay, the market treated that beautifully. So even if you do not buy at this fair value gap, you could still see how the market came back to this midnight opening price right over here. You see how the market reacted to the midnight opening price. It traded right above it, came back to it, reacted with confluencing with this fair value gap. But notice how price stayed over here. Just notice this, and then it took off. So even if you could not buy below the midnight opening price, you could still buy at the midnight opening price like so, and you will still be correct. So for those who know how to trade very well, they could have taken a trade below here, which is actually what we call the ICT total soup right down here. It becomes very difficult to actually trade these stop losses. Okay, for people who sold their stop losses are down here, but it's very difficult to trade, and you need a lot of practice to know how to do that. And if you can even go on a lower time frame, you are going to see a market structure shift right down here. You will still buy below here and you will still be good, okay? But in case you did not buy below here, you can buy at the midnight opening price, and you see how the market treated that level beautifully and it never came back to it again. So let us look at the 1 minute time frame so that we can see how the market reacted at that level. Let's see. I just went down to the 1 minute time frame, okay? It's the same thing. Now you see, this is where the market structure shift occurred on a lower time frame. So you could still be a buyer down here. You could be a buyer down here. You could still buy into this fair value gap here, okay? You see the market structure shift occurred here when this swing high got taken here. The market structure shift occurred here, okay? And then you saw price traded below like so into this fair value gap here, and then you could still be buying down here as well. That could still be a perfect trade, okay? But in case you missed that, there's no problem. You see the market gave you a second opportunity over here, okay, at the midnight opening price, so you'll be buying here. I hope you understand this lesson, and you may have to go and try this strategy. Trust me, it's really going to help you again. So what is the takeaway message? We have to wait for an accumulation during Asia, and then you sit and wait for the midnight opening price. You wait for the market to trade below the midnight opening price if you are bullish, and then you look for a market structure shift and then you buy. That is simple, okay? And if you are bearish, you wait for the accumulation phase during Asia, okay? Wait for the accumulation, wait for the midnight opening price to open, wait for price to trade above the Asian range or the Asian session where the manipulation is going to occur, and then you wait for distribution, which is going to occur at the later stage, and then you look for your sell opportunities. Thank you so much for watching, and hopefully we will do another market review. Thank you so much. Thank you.